Hey everybody, hope you're well. Today we're going to cover essentially the Nasdaq-100, or the majority of the most popular high-tech stocks. It's all part of the QQQ ETF. We're going to cover it for the week of February 22nd, 2021. All of our data analysis or recommendation comes straight from our big data and AI platform called Grow. If you like this content, please like and subscribe. So let's just jump into what's going to happen potentially this week. So to be honest, it's at a tipping point. The Qs and the high tech and the Nasdaq-100 is really at a tipping point. It may be a bit of a cop out not to give a set direction, but the reality is it could go either way, and it's at an inflection point. So the reason why it's at an inflection point is when fangs are kind of leveling off, which is not a bad thing. You can't have hyper growth indefinitely, so them starting to level off means that they're hitting their growth targets and producing well. It's not a decline, it's more of just leveling. And so if it was decline, it'd be red. Leveling means they've ramped up, they're kind of ready to go. They have their growth projection set for the year. So it's all goodness. Now, if you look at the non-flag, they're slowing down. The separation between, and why we always distinguish between it, is the FANG Plus, or the 16 companies or so that make up the Qs. So these are obviously the most popular ones: the Amazons, the Apples, the Facebooks, the Netflix, the Googles of the industry. They make up 65% of the total Qs holding. The non-fangs is everybody else. So the Workdays, the Monster Beverages of the world, and why they're there, I have no idea. Intuit, Cadence, and Autodesk, and some of those we're going to cover today. So they're about slowing down. They're not leveling. They've done a little bit of a pullback, which is concerning. The other is stock prices exceeding growth, and so we like to see that the two kind of grow in tandem, and our algorithms very much peg that. When there's excess growth, there's a pullback. When there's not enough growth, or there's high growth and the stock price hasn't adjusted, we'll see the stock price go up. So we're seeing that stock prices is exceeding growth, which means there could be a potential pullback. When it could be at any point. We were projecting it would hit the week of the beginning of March. A little bit of it hit last week, sooner than we expected, but certainly it's at a point where it may pull back a bit. Not a massive pullback, not like a 10% pullback or 15% pullback, but certainly a continuation up to maybe a 5% pullback. Most notably is that it's gone up so much in the last 12 months. Again, it's exceeding growth. The other major one is unemployment, and if you saw the news on Thursday, not good signs for the unemployment market. Higher than expected continuation of employment growth. So that's a concern and may impact the broader market, which certainly would be the Nasdaq and the Q. So let's move on to the growth rate. So you can see from last year, January 1st, 2020, from this time to this year, pretty substantial growth, right? So it's 30-40% higher with this hockey stick progression. Now you can see towards the end of last week, a couple of points where it dipped a little bit at the end. You can see it here, which is good. We don't want it to go hockey stick all the way up. These are mature organizations. They're not going to be a startup with a hockey stick growth. They're going to ramp up to recover from what occurred with the downturn in the March, April, May, June, and recover back up. But they're certainly, what we're projecting, they've hit their growth targets in terms of what they needed to do and should be leveling off, which is good. Again, stock prices are stratospheric, so potential for a pullback. So who's announcing this week, which could impact the pullback? So there's 6, or should be 9+, 6 of them. We'll talk a little bit about Autodesk, Cadence, Intuit, Monster, Nvidia, Workday. Obviously, Nvidia is the monster in the room. We own them. We'll sell before going into earnings. But let's just jump into some detail with them and some usual option activity. So as we move into the Prep to Grow application Grow, so these are 5 that had unusual option activity. Now, these are unusual option activities. These are not ones that we have bought or would buy. So just note that we'll cover just the detail of it, but these are the ones that had the most unusual option activity for the ones that we're tracking, or the 5 that we're tracking to announce this week. So let's jump into Nvidia. Obviously, the biggest of the bunch, most growth. They're part of the Qs, the SPY, and they're part of our own FANG holdings that we track independent. Rapid growth, right? Their earnings is going to be on the February 24th. This is unusual option activity, so we would not buy this. This is a put. This is just a put that has unusual option activity. So we track these at what we call movers. So as they move and have unusual activity, we raise them up to our subscribers as alerts. If this fit our strategy, meaning we would buy it, or we recommend other subscribers to buy it, this would be green. Since it's red at extreme risk, we would never buy this recommendation. And I think all 5 that we're going to cover today does not fit our strategy. So we would not buy these. It's just they have unusual option activities, and so we're going to talk about that. For the unusual option activity, certainly it's at a put for the March 19th expiration date at the 585 strike price. And the price is really cheap, probably why a lot of people have been buying it. So this is why there's certainly some interest in this. If we look at the volume to this open issuance, it's 480 volume to 97, so quite a bit higher on this, and this came out of the Friday close. If we were to do a put, the projection is, or I should say we're not going to do a put, but let's talk about the moving averages instead. So if we look at this, Nvidia's at a near all-time high, right? So obviously way above 200-day moving average, above the 20-day moving average, not quite above the 5-day moving average. So they've gotten as high as over 612, I think it is, so 614. So they're near all-time high. I love Nvidia. They're great. I game. I have their cards. I use them to play video games. They're announcing their Q4 and their fiscal year end. They've done very well. They've had a bunch of releases come out. I would never buy this put. I think whoever bought this is playing a guessing game. But they're good. They're very good. They're growing incredibly. Their growth is exceeding any time in their history that we're projecting, or I'm projecting. So put, no way. Never do it. We own them. We never hold anything going into earnings, and so we'll sell this prior to earnings because, you know, one simple word could make the stock decline. So we don't recommend playing earnings, but I definitely would not play a put on Nvidia until something else changes. But they're dominant. They're great. I love these guys. Great gaming cards. So let's talk about Workday. Another one, again, it's not green, so this does not fit our strategy. Would not buy this. Workday dominates in the HCM space. Know a lot of people that work there. They reached out to me for opportunities. Workday's great company, great leadership. Generally all around, just pretty much of a great company. They're part of the Qs. I'm sure they're probably maybe part of a couple others, but the biggest thing about Workday, Barry-based, Pleasanton-based, is what's next. They're dominating the HCM space. They're crushing it. Every week we pick up signals about who they're replacing and what they're doing and whatnot, and they're just taking out all the HCM vendors. Oracle, SAP, can't really compete. SAP had a little bit pullback. It was interesting. We saw SAP take out one of Workday's customers recently. Who was it? It might have been Cadence, actually. But they took out Workday from somebody, which was notable, which rarely ever, if ever, happens. So kudos to SAP for knocking out a Workday customer, which really doesn't happen. But Workday dominant. It's all about what's next. Their growth rates are not what they were when we started tracking them in 2013. So it comes down to, are they just okay being an HCM and finance company, or are they going to do something more? So I like Workday. I think they're overly priced. And the concern is what's next, right? So what are they going to do next? Are they going to move into manufacturing, CRM, whatever, right? But what's next for these guys? So hopefully they come out with it. They're very smart people. I'm sure they have something in the works. What the announcement is or when it's going to come out, we'll have to see what it is, but they're dominant in the HCM space for sure. You can't go out to a company and not use Workday. So let's go to Cadence. Kind of an older company. I like Cadence. Smart people. Worked with them in the past. They do not fit the prep to go strategy, so I would not buy a put on these guys. Somebody bought a put on them with unusual option activity. They're growing rapidly. 30% higher from last year, so they didn't have any slowdown. They do chip design software, ICs, and that kind of stuff. So very strong in that space. Obviously, chips are the future of the world, continuing future of the world. They're good, like them. We don't own them just because they seem a little overly priced based on their technicals, and our algorithms don't like them either. They had E volume to an open of 149. There's not a whole lot of option volume on these guys on Cadence, but they're an excellent company. As you can see, rapid growth throughout the last couple months. No unusual news on them, but they're a good company. They're worth their growth. They be reaching the cap of that growth for now. But Cadence, great company. I would not buy a put of them, but there is unusual option activity. Not a whole bunch. Again, it's not a popular option. So 0.54, which is pretty high. And all these numbers come out on Friday, I believe. So these are end of day Friday option numbers, getting ready for our subscribers and movers on Monday. So let's go to the next one. Intuit. I hate these guys just because I lost money on them. But otherwise, they're great. Another Bay Area company, small business. They've just crushed it. I think we did a short on them, put on them back in the May timeframe. Yeah, May timeframe, June. Clearly didn't work out for us. You know, we took a loss on that, sold off. Prep to grow is not 100% accurate, so we do take losses. But unusual option activity, not a whole lot. This is also another not very popular option. Cadence, they're dominating it. Excuse me, not Cadence, Intuit. They're dominating it. They're very good, very talented folks. They're announcing on the 23rd. They've had a great year of growth, near all-time high. But I think they have some more room to grow. So we're not predicting them as a strategy for a put for sure. But this is that had the most unusual option activity that came out of our algorithms on Friday. So Intuit, great company, growth, February 23rd. Autodesk. These guys are interesting, doing Q4 fiscal year end announcement. They've in a lot of trouble. They're half the company they were last year at this time in terms of growth wise. So there's been a dramatic pullback. If we look at kind of the unusual option activity, not too much. Another one of these, not a very popular option. So 0.45 is pretty high for them. For the July 16, 2020 expiration at the 260 strike price, it's an expensive option. But their year has been rough. Projected half their growth from last year. They took a beating last quarter. As you can kind of see, at the beginning of the year, they took a beating. Back here, I think it was around their Q3 announcement. But Q4 year end, either they really reined in the costs because of downward sales or something, but their future is at risk because of their growth for sure. So while we're good, we're decent. Loosely say decent at predicting puts. We would only buy an option that had greater than 95% success rates within a 5-day prediction or 30-day prediction. I would not buy these guys. It's certainly not a stock or a call. I would probably do a put, but they don't fit our strategy, so I wouldn't do it right now. But they're hurting half the growth. Another Bay Area company. I know a few folks that work there, smart people. But their growth is just not where it needs to be. So let's jump into the rest. That ends our kind of unusual activity for folks that are announcing this week. So let's jump into the rest. So let's go back to the broader Nasdaq and Qs for the year. Growth, certainly non-FANG Plus is higher than last year's. FANG Plus is still much higher. Really kind of leveling off for the last 2 weeks, which is good, is what we're projecting. So level growth is good. Stock price too high. So good here. Our yearly stock volume, I'm surprised there's not more stock volume on FANGs, to be honest, with the year end. Where we expect non-FANGs is where we expect it to be at, but not more volume on the FANGs, especially near all-time highs. is unusual, I would say. 30-day predicted stock price flattening. You see a little bit of pullback from last week, which is more of a sign that the price is overhyped, and so there'll be a pullback. As you can see, while we have these spikes, usually it means there's a big growth on this. We haven't really had a big spike downwards, just some pullbacks. We see that certainly stock is overinflated, SQ as a whole, so there'll be a bit of a pullback. Long option volume, FANGs, more puts that we're seeing coming out of it, which is good just because it's overinflated. So hopefully folks make some great money off of the long option volume as a put. Others, a lot of call volume, which our algorithms wouldn't agree with. But hopefully they see something we don't and make money off of it. Bear versus bull. So more puts this week for the FANGs, which is why we're seeing a pullback. We're recommending a lot of puts, to be honest, in general, which just means there's a higher stock price for all companies in general. Last time our algorithms projected this many puts, we went straight into March where there was a rapid decline. So we're actually pairing off as an entity prep to grow our trades that are calls and stocks just because of potential of a pullback. Again, our algorithms haven't predicted this many puts since February, right before we went into March. So that's concerning as well, and really saying there's a pullback. But growth is much better than it was last year at the March timeframe. Just overinflated stock, a little bit of a bubble. Not a huge bubble, small bubble with a pullback. So that's where we're at for the week for the Qs. Again, the Qs in the Nasdaq-100 is certainly at a tipping point. We think there's going to be a small pullback. Stocks are outpacing their growth, which is a potential if it continues for growth. Not for growth, but for a bubble. Let's hope that doesn't happen. Bubbles are never good. And again, we're pulling our option calls and stocks, which you can do on your own. It's what we're doing. It's our strategy. It's based on the data that we see out of our big data and AI platform. You may see something different, which is great, and hopefully you're more successful than us. But that's where we're at for the week. Tipping points. Expect some volatility over the next 2 weeks. But thank you for your time. Hope you have a great week of trading, and take care.